Morning all, how are we all doing? Happy Monday, back again. Morning Peter, morning Prince, morning Danny, morning Stevie, Jerry, John, Kennelly, how are we all doing? Everybody have good weekends? Didn't get up to much this weekend. Nice lazy weekend. All good though. Morning Rain. Right. Morning Andrew, morning Sarah. So let's have a quick look at news this week. It's a bank holiday, not bank holiday. It's a dead news day today. So there's no news forecast whatsoever today. Over the weekend, we've had nothing news-wise, apart from this morning, Russia fired some warning shots at a boat. That's it. So that's about it, basically. There's no other news overnight. There's nothing coming out of Japan. So no indications as yet that they're unhappy with the state of the yen weakness, but yeah, nothing exciting really at the moment. Everybody else? It's like watching paint dry this morning. Yeah, it will be at the moment. Market's not open yet. It's been like watching paint dry for the last week or 2 weeks, really. So, but anyway, nothing we can do about that. So there's no news over the weekend to worry about. There's no news today to worry about. So today's price action will either be crazy moves based on them pushing the market somewhere before news, or they won't do anything. They'll just hold it in rotation today. So we'll see what happens today, but it could go either way. News this week is all focused really around tomorrow, Wednesday and Thursday. As you can see, Friday's got nothing much. It's just retail sales on Friday for the pound. But tomorrow we've got the monetary policy meeting minutes from Australia. Unlikely that's going to do much because we kind of know what the monetary policy is, and it's unlikely in the last week since we had the last version that they're really going to change anything. So I don't think we'll get much off of that overnight, but we need to be aware of it because the Aussie and New Zealand might move overnight. We've got bank holidays in Europe tomorrow, in France and Italy. We've got the claimant count change for the pound to do with employment. But the main news tomorrow is CPI. So it's CPI for the Canadian and then retail sales for the US. So it all kicks off tomorrow afternoon. Then we go into the rates for New Zealand, going with an expected freeze at 5.5. We've got CPI for the pound tomorrow morning as well. So, Wednesday morning. And then it's FOMC on Wednesday. So this is just the FOMC meeting minutes. There's no press conference. So these FOMCs tend to be more of a whipsaw. They don't tend to be as groundbreaking for movement, but you do tend to obviously get a lot of movement off of FOMC. And then Australian unemployment on Thursday, followed by the US unemployment claims. So busy-ish week. We've got 2 CPIs in there and a rate. So we will get a decent amount of movement off of this week, hopefully. Well, I say decent amount of movement. In summer trading, we might get an ADR. Pretty much it. Excuse me. So, positions-wise, I'm going to go through all the pairs and everything this morning. We'll go and have a look through everything. I haven't managed to bank anything this month. It's just crap. Nothing's moving. So, you've got 2 options. Excuse me. When the market's like this. You either drop down to M5 and start gambling with your life, or you just accept the fact that it's just a slow month and get on with it, which is what I usually do. You can obviously, there's intraday movement you can take advantage of on the lower time frames, but everything else basically on any time frame above M5, you're kind of just moving ever so slowly in a single direction, grinding like that, or you're range bound. So it's not very good trading conditions at the moment, but I've got plenty of risk on now, so hopefully we'll get some movement of some description this week. Even if it's range bound movement, I should be able to get something banked this week. But if I can do 5% this month, I'll be happy. We'll see. Morning everybody else that's just come in. We have 5 minutes to the open. There's no ADRs today. Obviously, market's not moved much in Asia, which means there's obviously no weeklies. The only two monthlies we've got are Euro Odd and Euro New Zealand. So it's Australia and New Zealand against the Euro. So that's had a fairly decent monthly move. Whoop, wrong one. So where's the month start? August there. So it's that movement there, basically. So that's its normal monthly range. It's achieved already. We're midway through the month. It's the 14th. So there's every potential for some kind of pullback on this. Nice area to target down there. Got another one there as well. So maybe getting a pullback on that. Euro Odd and the Euro New Zealand as well. Pretty much the same pair. Don't trade both, really, because it's the same thing. But looking for a pullback on that. Apart from that, there's nothing to look at on the ADRs. The RSIs are pretty flat as well. The RSI 14s, pound New Zealand is lit up at the moment. Nice extension there, 3-day push. It's extended above the 70, has come out of the 75 extension. I've got a short on it from Friday already. And then we've got New Zealand dollar Swiss is the only other thing that's extended on the 21 RSI. That's just about extended there. I got a long on that one from Friday as well, from the H1M5 entry. Or was that this morning? Might have even been this morning. Yeah, I took that this morning. So I need to put TP on that. That's pushing it. 200 ADR on it. 0.25%. I'll be happy if we can get 125 ADR of movement in this. Look at it potentially bouncing off of that low. But yeah, about it. So that's all of your ADRs and your RSIs. So I'm going to whiz through all the pairs this morning after the open. And we'll just have a look at everything. DAX this morning, we got a gap fill in play at the minute. The potential movement this week is the upside gap fill. As you can see last week, it's complete rotation all week. Didn't go anywhere. So we're playing the gap fill at the moment this morning. And once that gap fill is done, be looking for a push to the upside, hopefully. What's that big yellow thing that's appeared? Grateful Buster, $10 tip. Thank you very much. Much appreciated. Morning, night for me in Southern California. I know you don't trade gold, but I would like to know your thoughts on the chart. Okay, I will. I will have a look at gold. Seeing as you tipped me $10, I've got to make you $10 back, haven't I, basically? We'll have a look at gold in a sec. So yeah, upside, basically. We're looking for movement all the way to the upside there. So we got, how long we got to the open? 50 seconds. Can I do a gold recap in 50 seconds? Let's see. So gold is pushed down. We're coming down into propulsion. We've got monthly low and previous monthly low down here. We got lots of news coming up this week, but not so much of it is based on the US dollar. So we got retail sales tomorrow, Tuesday. Yeah, tomorrow afternoon. And then obviously we've got FOMC on Wednesday. So what I would suspect, and I think probably is the best play on gold at the moment, is to wait for a bounce off of last month's low or the previous month's low. So this area ADR out of this propulsion gap, which is pretty much filled. Longs down there, basically, I think is the best thing to do. And just wait for it to get extended. So just coming down into this area down here and look for a bounce back up to the upside. If you scroll out, you can see we are literally just in, and this is going back to the end of May. So this is June, July, and August. Yeah. So longs out there at the moment, but you're going to need a weak US dollar. So pray for negative figures on the US dollar. We should get a good push. Thanks for subscribing. Khadija, welcome aboard. Morning, Keith. There you go, Grateful Buster. There is your analysis on gold. Sorry, I can't be much more help, but it's not really moving a great deal, but I would be much more interested in hitting the long button on it and holding it for a couple of days at least. Get some kick off of that news. Right, markets open. DAX, there's your pre-market 15. It's already broken to the upside. So got a long on the DAX. Unfortunately, we are buying straight into a gap fill. So if it does break long, there's potential for it just to turn around and run from there, but we'll see. So this week, because we're down at range lows on the DAX, well, depends what you class the range low as. One of those two levels, but somewhere down there, potentially range low, and then we've got the monthly low down there, which is well within ADR today. So if we can get a push down into there today, lovely looking long. I think it's a lovely long from where we are at the moment, and that is your ultimate target all the way up in that gap fill. But that's 225 or 250 ADR away, so that's not going to get hit today. But big strong push to the upside. So it's broken long at the moment. Obviously, we're playing the gap fill initially. Sorry, bear with me one sec. I want to take a long on the Dow as well. So yeah, so just watch for price action here. This could be a fake move this morning and then back out to the downside, but we'll see. Not particularly violent open, is it? At all. So the pre-market 15 range is there. Your pre-market 5 range, if you took that, you would have got whipsawed on it. So you'd be double-ended entry or stop out or whatever you're doing with it. The 15 is there, so you're broken to the upside only. I'm taking this range here on this account because this is a wider range than the minimum, which is 1/10. I was going to say then 10% of ADR. So slightly wider range I'm playing here, which means obviously I've got to travel a little bit further to get TP on it, but we will see where we go. Not going anywhere at the moment. Might just let that play out. Didn't have a very good day on Friday. Yeah, I mean, Friday was just chaos, Friday afternoon. So the market didn't go anywhere on Friday. The Dow broke to the upside, which was good. And it just so happens that's the only instrument that the EA didn't trade because there's a little bit of a bug with TP setting in it, which I've got to fix. But that one actually did have a nice break to the upside. But as soon as that initial break on the Dow had done, it just went into rotation for the entire day. It's Friday afternoons, always the same. And the S&P obviously just did a rotation as well. So S&P, the upside break, got a nice target at the downside. So whipsaws basically all over the place on Friday. So small loss day. The DAX looks like it's doing something very similar this morning. So potentially, depending on how you measure your gap fills, that's done. Very close to that sort of close area on Friday. Maybe it this morning. We'll see. But the official gap fill on it is there. So once we get there, that gap is done. And then I'll be watching that high. But if we break through that, I think we got a good run today. We'll see. See how we go. So 18 seconds to candle close. That's the most boring 5-minute candle in the world. So there's your 5-minute range in. So that's your safest break today, that 5-minute opening range break. Thinking about it, and there we go. So there's a break, and there's your gap fill. So see where we go from here. So all the unfinished business is done. So now we'll see if we've got any movers. I might have longed too soon, but no worries. Great Phil Buster. Yeah, well, I think you're right on that. The way this market, I don't think there's such a thing as getting in too soon in this market. If you get in, whether you get in exactly right or you get in too soon, you're still going to be sitting here for days because nothing is moving. So, if you got in here long on a pullback like that, you've been sitting here for 4 days and you've moved a whole 145 pips. It's less than an ADR in 4 days. It's just not going anywhere. So FOMC on Wednesday, the ideal would be, I think, with this, if you can push down into here by Wednesday, and this is literally ADR today. So if you can move half an ADR by Wednesday or an ADR by Wednesday to the downside, you're in a perfect spot here for them to whipsaw the market and just go and to take any liquidity that may or may not be sitting under this low or under this low. That's all I can see on it at the moment. It's just a case of waiting on everything. There's a lot of stuff as well. If you look over the last few weeks on any instrument, we're not even getting to range highs. So, when you've got that nice move put in, that double bottom, you've got a nice high there, you've got a double top there. It's taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days to not even get, that's 2 trading weeks to not even get back down to that low. This is just the reality of summer trading. You just don't get any movement. So, like I said earlier, you either need to get in on M5 and pick small ranges and try and extract money from that sort of movement, which is incredibly dangerous because if you take a short up there, there's such a light liquidity in the market at the moment. There's every chance that they will pop out the top of it anyway, if you're using stop losses, obviously. But if you're not using stop losses, you're going to get in on unextended conditions, which means obviously it can push against you. But the push against you is going to take days, and you're still not going to get into much drawdown. So it's just horrible. It's just a hideous month, August. But then, like I said, last year, I did 15% in August. So you never know. It might wake up. Morning, Heffron. How is the cleanse going? It's not. I lasted a day and a half, Heffron. You obviously haven't been in here since I started it, but I lasted a day and a half. The wife and I had so bad headaches, we had to stop. Couldn't do it. I know there's a 2 to 3 day period where it's hell and it makes you feel terrible before it makes you feel amazing. Not interested. So we're drinking them like juices. So it's 200 quid's worth of juice we bought, which is nice. So we're defrosting it as we go in the day and just drinking it. Yeah, that didn't work at all. For those that don't know, if you're new in here, I was doing a juice detox, which was meant to last for a week. But literally the headaches were just unbearable, so couldn't do it. Morning, great. Right, so there's your 5-minute break to the upside, straight into the gap, rejection. So there's a little bit of resistance up here. There's a lot of selling coming in at the gap fill. So this is everybody selling the close of Friday. 20 seconds left on this candle, but it is going to break and hold to the upside. So bullish. So be prepared for a pullback potentially and new leg up. Just about going to break, isn't it? And hold. There we go. Okay. So definitely long on the DAX. I'm looking for 1.5 bar on my range, which is up there, just above that propulsion gap in that accumulation. So see if we can get there. Right. Let's look at the FX pairs. Morning, day trader FX. How are we doing? Right, so I'm going to run through all the FX pairs this morning and just see what we can find. The other account that I started trading, this one, which was meant to be trading support resistance bounces, I've kind of given up with it. I'm just 1.5% down, sitting in 1.7% profit. So I haven't made anything. I haven't lost anything. But I've been looking for good opportunities at support resistance for a week or so. As you can see, lovely resistance bounce, took it. I'm still in it. Yeah, so even trying to trade support resistance zones is just taking too long. Everything is just taking forever. So I've kind of just given up with this as well. I can't be bothered with it at the moment. It's going to be one of those months, even on prop, struggling. Every time I get something, I give it back because it's just not moving far enough to get decent risk rewards out of anything. So so as we're going through all the FX pairs, we'll have a look and see if we can spot any decent support resistance bounce plays as well. But yeah, I mean, it's just hideous at the minute. It's just so difficult to find opportunities anywhere. So, but we'll go through them all, start to finish, starting at the top. So obviously from an RSI perspective, the RSI dash is pretty flat now. So pound New Zealand is the only thing now we've got lit up on the 21 RSIs. The 14s, which is the more sensitive version of the RSI. We had a couple get to the 80-20 last week, but the vast majority just about get to 70-30, maybe into that level, and that's it. Other than that, it's all flat. So, you know, even the RSIs, we're just not getting those opportunities. So there's no point in looking at specifically RSIs on these. I'm going to leave the RSI 21 on there on the hourly, but we're mainly looking for opportunities for support resistance bounces, ideally, and see if there's any decent levels coming up. But the market seems to be overstepping the levels very easily at the moment because there's not a lot of limit orders sitting in the market at the moment because there's nobody around to manage the orders. We're finding that we're just like flying through levels and then it will come back from that level. So support resistance, you kind of need to draw almost half an ADR around the support resistance area and give it that leeway because it's getting slipped through the levels because there's not a wall of orders sitting in these places at the minute because there's just not enough volume of traders in the market. So so Aussie dollar CAD, potentially that might be a nice little long opportunity there, but you know, sometime by the end of the week, if you're lucky, you may have got up to there. So yeah, I mean, nothing particularly exciting on that one. It's an RSI extension, just about at the 25. Didn't quite get far enough for me to get triggered with the EA on it. So not long on that one at the moment, but that is a nice long opportunity. Pullback wise, obviously, that high there is off of news, but that is the high. So look for some kind of 38 to 50% retracement off of that move back into propulsion here or into here if you're long on that one. But the long opportunity on it was, I think on Friday. Oh, no, it was this morning. Yeah, so we had a reversal out on that this morning. There's your W. So not a bad looking long opportunity, but it has gone already. Aussie dollar Swiss just dropping. So all the Aussies are bare at the moment. They've had bad news with the inflation. Well, the inflation has come down, so it's all negative for the Aussie at the moment. They're talking about freezing rates, and we've got the freeze of rates coming this week with the New Zealand dollar. So I would forecast sort of more downward momentum on Aussie pairs at the moment. So trying to get some kind of extension to the upside on this to get an entry short, unlikely. So there's no support resistance areas of any interest whatsoever. So nothing to look at on that at all, really. If you go out to the 4-hour chart, you can see it's just a constant downtrend on this one. The Swiss franc killing the Aussie. So you want to be looking for short opportunities, ideally anywhere, if you want to scale in. But the last opportunity on the 4-hour you had was up here. So that was a couple of entries and short. It's just hard to get into. Hard to get into at the best of times. At the moment, almost impossible. So that's the Aussie Swiss. Aussie yen is a little easier. So I had a short there that I closed out on Friday. I didn't cover the trades I did on Friday, did I? But yeah, There you go. So there's one I closed out on Friday. So shorted that off of H1 M5. Friday, basically at the close, you can see I shut that. It's gone a little bit further now today, but I just wanted it in the bank, basically. It was almost, I think it was 0.25%. Aussie yen. It wasn't even that, look. 0.15%. Just needed something banked, basically, just to cover the drawdown control, really. If you look at the P&L, it's moving so slow. Literally, all we're getting is one drawdown control, one drawdown control, one drawdown control. So on Friday, I banked a couple of trades just to cover the drawdown control, because that's really all we can do at the moment. Because, you know, that's 0.15% profit. Even if that got down to this low, that's 0.25%. You know, it's just not enough movement to bank. So all I'm doing at the moment is just keeping on top of the drawdown control, really, and waiting for something to kick in and move. So that was banked on Friday. It's an RSI extension, obviously, so it's a normal entry. But you can see, obviously, what we want to do here is wait for that high, and this low here is another good entry point. So again, if we get an ADR hit to the downside, long. If you get an ADR hit to the upside, potential short, although I'd much rather be shorting it up here, because that's definitely where the limit orders are sitting. It's questionable whether that will act as a bounce point again, but if it doesn't, you take a long and you take a second long and you get out when they bounce off of this level, because there will be limit orders sitting there. So right now, bang in the middle of nowhere. So I'll be looking at that high and that low. So ADR hits, basically, to the upside or the downside. So normal stuff. AJ, instead of support resistance, I've been trading harmonic patterns. Cool. Good luck with that. Symmetrical triangle patterns. Probably better harmonic pattern. Show me a million Gartleys and I'll show you a million Gartleys you haven't seen because they failed. When you start actually back testing those. If you get an EA on that, AJ, if you can find an EA that does harmonic patterns, back test it. They look great. But the problem with harmonic patterns is you can never see the ones that failed. And all the ones that failed, you can't see because they haven't completed as harmonic, so your eye doesn't see them. But you will see a million, for example, head and shoulder patterns that do that. Yeah. But you won't spot them because they didn't complete. But if you actually go through your charts, you'll find way more harmonic patterns that do not complete. And they would have all been trades. So if you build an EA, I built an EA. Well, I didn't build an EA. I used an EA and I modified it to do some back testing on them. And they are great in theory. But at the end of the day, they are just Fibonacci retracements. Which is why they don't work, because there's 4 Fibonacci levels it can react at. Anyway. But in these sorts of times, you probably will work because the market's obviously not moving anywhere. So all you're going to see is harmonic patterns forming because they don't need much to get out of them, do they? Because they're small targets a lot of times. Anyway, Aussie New Zealand. So I'm in short on this one off of the H1 M5 from Friday. First entry. I'm not getting greedy. I'm being, let's see if we can possibly come and test that low somewhere just before ADR, please. That's all I want. So yeah, down to there. This area here is obviously a lot stronger. So we've bounced into that a couple of times. Yeah, used it as resistance, 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 resistance. Broke through it on news. Resistance, 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 resistance. Broke it, support, bounce. So this is a very nice, strong area. It's a previous area we've tested twice as well. So if we can get down to there, I suspect you're probably going to get a bounce, so I'm targeting way before we get down there. So, my God, this market this morning. Look at it. Look at the Dow. I mean, there's just no volume. Look at it. It's taken, what are we now? 20 minutes. It's taken 20 minutes from the open to get from there to there. It's a long climb, isn't it? Anyway. Aussie New Zealand. So short on that from an H1M5 mean reversion from Friday. This is a nice resistance here. So previous resistance turned support, turned back into resistance. So shorting there, looking for a push down. Aussie New Zealand could go either way. We've got news this week on the New Zealand dollar. So until we've actually got two newses, haven't we, this week? So we've got the Aussie monetary policy meeting minutes tomorrow that could move the Aussie New Zealand. And then obviously on Wednesday is the main news, which is the New Zealand rate at 5.5. It's very difficult to tell what the market's going to make of this. I think it's unlikely to be positive for the New Zealand. But you can't really tell at the moment. So I suspect we'll probably get some whipsawing off of it rather than any kind of movement, but we'll see. So yeah, looking for a downplay on that one. If it pushes up, obviously we'll be looking for bounces up at that monthly level there. So just scaling in basically on the way up. And if it's pushed all the way up there without doing a profit take move, we'll get in on the profit take move. Aussie US. So that's out the lows at the moment. Got 3 longs on this. So this is drawdown control that was done on Friday. So that's partly why I closed out that other position to pay for a bit of that. So got in 1, 2, 3, 4, 5, 6, 7, 8 days in range. And we've just popped out the lows of that range this morning. So another position's been taken on that, bringing the average down within ADR. But obviously getting an ADR of movement is like pulling teeth at the moment. So I'm just going to go for sort of up at that range high now, somewhere up there, see if we can get back up into that level. So I'm just going to adjust my targets. There's no decent propulsion gaps on this. So obviously there's lots of propulsion gaps on the Aussie because the Aussie's just been dropping since it's had its news. So I'm obviously with that third position that's just been taken, drops the average within ADR. So I'm not going to target that propulsion gap because it's too close. There's not enough money in it. So I'm going to go for that high there. So there's a potential bounce point there in that accumulation that we broke, which caused a propulsion gap, which has already been filled. So that is what I would see as potentially a bounce point when we come back to it, because it's already done it twice. So assuming that we're going to go into some kind of range, we should be bouncing and reacting somewhere there. So that is a decent target that we should be able to achieve if we're going to do it. If it's going to continue down, obviously, all we're going to do is get a little bit of a pullback and then a drop, which means I just need to scale into it until we get some kind of bullish move on the Aussie or bearish move on the US. So news tomorrow and news all week on the US. So this one is actually going to have a decent amount of movement all week. In theory, because we've got the New Zealand news as well. Dow's broken to the upside. So I'm not even going to add to that this morning. It's no point. Let it run. So Dow's just broken the upside. And obviously Dax is gone. Same as the Dow. So that's pushing nicely. On my way to target. God, look where my target is. Above a propulsion gap and resistance. I'm going to let it play out. Let it play out for the minute. It's a fairly decent move there, but I'm just worried about this high. So this high here is the area that I was looking at. Potentially, we might find some limit triggers there, which is kind of, if you look at it, it's just sort of from Friday. It's just kind of the high of the New York session on Friday. We'll see. So yeah, so that's Aussie US already in that one. Long morning, Hod good guy, Hood good guy, Hood good guy. Morning, Steve. Morning, Marco. Morning, Gordy. There are two guys from the UK who turned 5,000 into £1 million in 10 days. Called Tempest FX. Well, yeah, anybody can gamble, can't they? I've no idea. You tell me. You're probably working for Tempest FX, and that is a nice way of promoting them. So well done. Morning, Neo. But if they are, then it's just gambling. But I can do that in a casino. I could walk into a casino with 5,000 and turn that into $1 million, couldn't I? Very easily, using martingale and red and black on the roulette table. Doesn't make them traders. It means they're gamblers, which is fine. Nothing wrong with gambling. Oh, I'm tempted to add to this Dow. I know if I add to it, as soon as I add to it, it's going to drop. So I'm going to leave it. See if we can get a run on it. CAD Swiss. So CAD Swiss is just kind of hovering, as everything is. We got this low from 3 weeks ago. And there's your 3-week high. We pushed up into it 2 weeks ago, pushed back down. There's your 2-week low. And then last week, basically, we didn't move. So that's your range. So you can see the range as being basically big range, contracted range, contracted range. So if you look at this actual price action on a weekly basis, you've got a candle like that. You've got a candle like that. And then you've got a tiny little candle kind of like that. Yeah. So it's just big range, smaller range, smaller range. So it's kind of like an inside bar contraction, except it's popped its head out the highs there and it's popped its head out the lows. It's just not going anywhere. So range lows is where we are at the moment. So I'd be buying up anything down here, ADR, monthly low, weekly low, all this area down here at ADR is basically an area to buy it from. Target is propulsion gap to the upside at the moment. This one's kind of pretty much done. But, you know, if you buy it here, you'll be getting out of it probably in September because it's just not moving anywhere at the minute. So we are 1, 2, 3, 4, 5-ish days sideways the entire week. So look for longs, basically, I would on that one. So you can drop down M5, M15, take the reversal alerts as you see them on these lower time frames when you get down into these lower areas. So I'd be looking, you know, you see these wicks here. Yeah, that is basically where the limit orders are sitting at the moment. So assume that they're still there. Buy that. You're not going to get an RSI extension on it, but that's a nice area to buy up. CAD yen, big move to the upside on this one. I say big move, multiple day push to the upside. Haven't quite got up into those highs. We're up here at the minute. So anywhere up here, look for shorts. So you had your reversal alert on it at the moment. This is going to need some yen strength to come through. But it could happen at any time, obviously. The US dollar yen is up at the 145 level and it's holding there. So we might find we get a bit of yen strength coming through to push price back down from that 145 level on the US dollar yen. But right now, up at the highs, so looking for shorts. You've just had a reverse alert on the hourly. Your M15 reversal alert was there this morning as well, roughly where the hourly was. And that has retested. Not very pretty, is it? But it's level of resistance. And we've had the sellers take control. So good looking potential short opportunity. So I'm just going to add. So the Dow, I've got a long on the opening range break. I've just put an add order here. So I'm just going to add a second position if we can break that high. Because it is grinding up quite nicely. So's the Dax. Trying to. So it's very much the same play. Add another second order there. Oh, and that must be TP, is it? No, it can't be. No, not yet. So if we can get a break of this high, that will hit TP. He says, as it immediately pulls back. Going anywhere. So yeah, CAD yen looks good for shorts. Michael, have you seen Greg Secker's new Ascot advert? He has a new AI software he's selling. I know, yeah. He shows a 200k trade. Yeah, brilliant. Right, so for Greg Secker to jump on board the AI software revolution in trading just shows you what a load of crap it all is, doesn't it? Need I say more? You've got somebody that wears eye makeup promoting an AI trading robot. It shows you how good his other products are. But we know that, don't we? Because there's a guy that regularly comes into the live room here that used to work for Greg Secker. So we know it's all a load of smoke and mirrors, as it all is in trading education. Birch thought he was going to say Galileo FX, not Tempest FX. Yeah, anything with the word FX on the end that is selling you a trading course, just run away. I saw them on YouTube. They were trading like 6,000 lots. Yeah, I mean, here's the thing. Anybody can do that. I can do that, right? In this account, I'm not going to do it because this is real money. But if I wanted to right now, I could hit the sell button for 50% risk on a half ADR move. And if it moves down by half an ADR, I make 50% on my account. If it moves down by 1 ADR, I double my account. Yeah. When I hit the button, buy or sell, the odds are 50-50 on whether or not it's going to go up or down. You know, anybody that's selling a trading course teaching you how to press a button and have an odds of 50-50 is an utter twat. Honestly, I mean, think about it, right? Would you buy a course if I said to you, I've got this secret system. If you flip a coin and it comes out heads and you press the buy button, there's a 50-50 shot you're actually going to make some money? Basically, that's what they're doing, isn't it? So anybody that turns any money into any money bigger than what they had before, it's physically impossible not to do it. Because I can sit here right now, right, and record a video for the entire day today. And what I will do is I will open up all 28 FX pairs, and on every single one of them, I will hit the buy button. And then I will video the trades playing out, and I will edit it down to show you all the ones that made money. And I will put them up on YouTube and say, I've got this amazing course. These are the results I produced. These are the trades that I took. Yeah. Here's a screenshot of them and a video of these trades playing out. If you want to know how I did this, give me $1,000 and I will teach you. That's what all these guys are doing. Yeah. Lies. It's all lies. It's all just cons. The whole thing is con. Run. They're all just con men, basically dressed up as people that think they can trade. Anyway, we've been through this many, many times, haven't we? I've got a video on the website if you want to know how trading courses work. Go watch it. Yeah, 6,000 lots. I should do it, shouldn't I? I should do it. I'm not going to do it on that account, but I will do it. I'll get an account. I'll get a demo account and we'll double it. If that one doesn't work, we'll get another one and we'll double that one. If that doesn't work, we'll get another one and double it. But then when we have doubled it, I'll put a YouTube video up and you can buy my course. Morning, Rajiv. More interesting opening the DAX this morning. Yeah. It's not very, I would say, energetic, is it? But it's getting there. We're making money, which is good. My biz is making website software for real estate agents. We are getting potential clients asking us if we have any AI in our software. It's just nuts, isn't it? The world's gone nuts for AI. There's a really good documentary on Netflix at the moment about AI, and it shows you where the AI spending goes, right? So imagine a pie chart, okay? And this is the AI spending and investment pie chart, okay? Stuff to make our lives better, like computers that you can talk to and they will just give you all the information you could ever want in your life to make your life better. Flying cars, automated driving, all the stuff that we think AI would be amazing at helping us do because it can react faster and do everything else that we think is brilliant. Yeah. This massive section here, spending, this is military. Yeah. So of all the AI investment that's going on at the moment, that much of it being spent by the military developing robots that will kill the human race. Oh yeah, and then I forgot. Trading. People that want to sell you a trading course using AI. Oh yeah, and obviously Steve, your bit's in there as well. Your bit's probably in that bit that's going to make our lives better. Oh God, AI. There's so many EAs already on the marketplace that have got the word AI in them. You know, it's just like, forget it. AI cannot predict the future unless it's got a time machine that I don't know about, but it might have. You never know. AI may have a time machine. We don't know. Unless it has, it's not going to help you, is it? We're getting a little bit stalled out on the indices at this propulsion. Really want to see this pop. If this pops, we've got to run basically up to ADR today. Actually, well, there's a little area of support there that might get a little bit of attention, but other than that, we got a clear run at least to there, if not up to ADR today. So let's get this pop. There we go. There it goes. So we need some follow through. So we've broken through the resistance. Limit orders have puked. So we'll see if we can get some follow through. There we go. So that's a propulsion field. That should be TP. Come on, don't do this. You're going to make me manually close it, aren't you? Just watch this candle for a minute. Just in case this TP doesn't get hit. AZ, the time on the charts on my MT4 doesn't match my actual time. No, it won't. You can't fix that. It's your broker time. You need to adjust. If you're running an EA that runs on time, like the opening range breakout EA, you need to put the times of your broker chart in. It's all explained in the manual and on the video how to do it, AZ. Go and read the manual for the EA. Come on. We've got 1 minute left on this candle. It is going to close bullish, but there's not a lot of volume. So I might just close. I'll wait till this candle closes, and then I might close this first position out manually and then just adjust the stop. Break even. At least then I've locked it in. Rajiv, finally, VM have changed my hub to the latest. Well done. I've just got a pod delivered. Brilliant bit of kit. So we had my so with Virgin Media, they do these pods basically, which are like they're like mini routers that you plug in the wall, a bit like the old power lines. And basically it grabs the Wi-Fi signal and then amplifies it. So it's basically just a Wi-Fi amplifier. But we had one room in the house in my youngest's, and he could get like somewhere between 4 to 10 megabytes a second. Plug that thing in, boom, he's up to 100 on Wi-Fi, which is brilliant. And it all runs off the new Hub 5. Closing one, break even on the second position. It's too close. I mean, it's probably going to hit TP. We have broken out that high. The fact that the sellers have really battered back the buyers at that level just kind of says we might get overpowered here, and it might be the start of a pullback. So it could either be the start of a pullback here because the buyers have took a lot of effort to get through that level. They've run out of orders basically, and the sellers took control at that candle. So the sellers are basically back in control now. So either we're going to pull back and they're going to take a run up to get a positive move today, or there's just a brick wall sitting there and we're just going to run out of buyers and we're going to drop back down. So just taking one off, break even on the second position. So if it does pull back and run, I'll break even. if it manages to get a run, obviously I'll get out before these highs with the second position, which will be within ADR. So don't like the look of that though. Right. Back to the stuff we were talking about. The range of the new 5 seems to indicate that I don't need the mesh anymore. Depends on your house, doesn't it, Rajiv? It's all to do with the house and how the signal bounces around. But yeah, the Hub 5 is definitely better. AJ, you can trade Dow at this time with good results. I'm in the US and I'm usually sleeping. Trading is going to be the only job left after the robots take over. That is absolutely true. And it's the only job that is recession-proof as well. I don't care whether the market goes in, whether the country goes into recession, everybody loses their jobs, or whether we're flourishing. Doesn't make any difference, does it? I don't care if the pound goes up or the pound goes down. Doesn't make any difference. I'd make money whatever happens in the market. So, best job in the world. Totally recession-proof, no boss. Can't go wrong. But yeah, so basically the only reason I'm trading the Dow, I'm trading Dow futures on my futures account. Because if you look at the DAX and the Dow, they move very, very similarly. Yeah, at the open. So whatever the DAX does, the Dow will tend to do the same thing in slow motion. So the range of movement in the Dow will be smaller than the DAX, but you tend to get the same movement, i.e. directional bias. So I trade the Dow futures with the DAX opening range break. So I use the DAX basically as a guide as to what the Dow should do. So if the DAX starts to run out of steam as it is here, I want to be watching the Dow for pullbacks. Yeah, so they move very, very, very similarly. But obviously, it's the US market, so there's no volume here because obviously the market's shut. But this is just the Globex session. And obviously within Globex, you've got the AI trading. All the bots are trading basically, aren't they, during Globex. So you're going to get enough movement to make money, but you've got to use large lot sizing because you're not going to get a range of movement. You're going to get a movement, but it's not going to be high range. So you need to double your or treble your position sizing because it moves so much more slowly, which in itself makes it dangerous. If there's a news event that affects the DAX, the Dow will tend to move violently with it as well. So it can be very dangerous. A lot of people don't trade Globex because it is dangerous. But it's easy as well because it's so slow. What's your TP1? 1.5 hour? Yeah, Mumo. Right. Carry on. Excuse me. CAD yen, we covered that one. Swiss yen, I've got short on that one. First position taken on Thursday last week. Obviously, that was the entry on the H1M5 mean reversion. We didn't go anywhere on Friday at all. But we have broken out of this high now. So either this is a false breakout, which is taking forever, or we're going to come back and retest that level there. So either way, I shall be watching this high for some kind of reaction. This is one of those trades at the moment where if we get down to this level, I mean, I don't normally use break evens, as you know, but this is something I would probably just put a break even on it when we get down to there, because it's not enough to warrant taking the trade off. It's not a big enough amount of money for me to go, yeah, that was a good trade. It's just going to get down there. So when it gets down there, I'll break even, and it'll either be that didn't work because we're going to do that, or it will break down and we'll get a pullback on that move and continue market structure. So at the moment, I'm targeting these propulsion or this propulsion move here, which is this accumulation break. We retested that propulsion gap and they bought it back up again. So I know there's buyers in here. So it's a case of pushing down into there really is the only decent amount of money. I mean, that's only 0.4%, but that's what I see at the minute. You know, if I take a TP here, it's like 0.18. It's just not enough money to make the trade, you know, worth it. But equally, if I've done drawdown control on something, I might go, well, let's just use that to pay the drawdown control. So we'll see what happens when we get there. But at the minute, not going anywhere. There's no levels on this one. Obviously, it's yen, so we're at the highs. So it's just a normal mean reversion short. Euro odd. So been in this, again, same as everything else. Been in this now for 1, 2, 3, 4, 5, 6, 7, 8, 9 days or something, couple of weeks. Initial entry on the H1M5 mean reversion. Sideways for 5 days. Moved up, sideways for 5 days. We've just broken the highs. Second position on. Average is brought up within ADR. Third position on, sorry. Target, I'm going to put back down in this propulsion now. So that's 200 ADR. Yeah, so if you look at how long it's taken to get from there up to here, extrapolate that into the future, I'll be getting out of this probably sometime either last week of August, first week of September. Short. Euro CAD, sideways. Right now, I've got one short on, just targeting very, very small profit in this propulsion gap. So looking to come back down to where that break was on the news and see if we can get out there. That'll be a 50% retracement on that move in case we're going to do another leg up into the highs. So right now, you've got two resistance areas above. One is last week's high, which is that top from Thursday and Friday. And the other is the monthly high. And again, you're probably going to take a week or so to get there. This area here, when this propulsion gap is filled, it's not a bad level. We came and tapped into it. We had a news event that pushed us through it and we resisted it again. We came and accumulated around the area. Then as we were approaching it, we kind of got stuck. So it's an all right area, but there is a potential long on that. This one has got a very weird bias, the euro at the moment. The euro, we should be getting more movement on the euro, but it's just not getting any kicks. So I still remain bullish on the euro at the moment because I think there's more interest rate rises to come. Same with the pound. But Lagarde is being very, very tight-lipped about anything on this at the minute. So it's hard to pick a bias. Not that you need to in a range anyway, but I mean, it's hard to pick a bias. So any RSI extensions, as in that one there, just going to take them as normal. Look, just all I wanted was that. And all we've got is literally 6-7 days of sideways movement. So if it pushes up, which it looks like it's going to at the moment, that's going to be too close to take a second entry. So my second entry will be somewhere in there. And just wait. But again, not getting really near any decent support resistance levels. Euro Swiss came off the highs on Friday. So that was a nice short play. Missed that one, unfortunately. And that actually worked. Same day looks. One of those few trades at the moment you could have actually got in and out in a day. Missed it. But your reversal alert on that one was triggered on Friday. And obviously it absolutely collapsed down beautifully. So right now it's a good support buy. M5, you just had a reverse alert on it this morning. M15, why is the chart not updating? Okay. So M15, you've literally just had the reverse alert. Last 15-minute candle. There's your bounce. So good looking long opportunity on Euro Swiss. So if that doesn't hold, we'll be looking to come back down into 2 week ago's low down there. And you've got your monthly low at the bottom. So nice looking long from a range bound perspective. Back up into the highs. Look. That's where they're selling from. They're buying from down here and down here at the moment. So looks good. I fancy that. I fancy that, you know. Four. No, cancel that. Buy stop. So I'm just putting a buy stop above this high. Give myself a nice bit of breathing room in case they decide to drop and take some liquidity and then run. So half an ADR of stop. Target is ADR. So 2 to 1. See if we can get pushed back up into that high. When it triggers, obviously, it's not. I'm not in it. It's just a pending order, ready to go. Best looking support and resistance we got today. So far, anyway. Euro pound, bang in the middle of nowhere. See what I mean about this overrun? Look, that was your high of last week. We tend to get these moves which last for hours, where they just push out the highs and then they decide, nah, and it pops back down again. It's very frustrating. But bang in the middle of nowhere at the minute. So last week's high and low, shorts, longs. So ADR hit to the downside, ADR hit to the upside. So a lot of this stuff, if you could just monitor the ADR dashboard, pretty much every time you get an ADR alert, you'll probably find your nearest support or resistance. So just use the ADR dash. Anything that hits ADR is probably worth just getting into it regardless, because it's highly unlikely it's going to be able to continue any further. If it's got to ADR, it's having a good day. So I'm just adjusting my targets on this. So that's euro pound, euro yen. So I've got a short on euro yen at the moment. A lot of these yens got extended last week. So the first entry there, nowhere Friday, not really gone anywhere so far today. There's multiple tiny little propulsion moves in here where they've been pushing this long. Obviously, this is part of the news. So this is the range that we've just broken out of. That was the Japanese saying we're going to do something amazing, giving us the news, and then the market going, that wasn't amazing. So we've broken out these highs into a new range high. So the danger is that this range high is going to hold. We're just going to bounce off of it. If that is the case, DAX is rallying. If that is the case, I'll just add and wait for some yen strength to come through. The fact that we're at the 145 level on the US dollar yen, I think we're probably going to hit a little bit of a brick wall there, in the fact that we might get some yen strength coming through off of that level. So that will obviously bring all the yen crosses down. So I don't mind really having too much exposure on that at the moment. So that US dollar yen 145 level is where we are for push down. Euro New Zealand, we've broken out the highs, got 3 shorts on this one at the moment. New Zealand dollar and the Aussie dollar weak. Euro not particularly strong, but this is all New Zealand and Euro and Aussie dollar weakness is making everything go against those two. So nice break on the Dow. And the DAX is trying again at that level. The Dow's off to the upside. Three shorts. Average is 150 ADR. Been in it for a couple of weeks. A week of it sideways, a second week of it kind of bigger range but sideways, and then finally we've had a couple of day rally on it to the upside. So just waiting for a profit take move on this. Yeah, we may put another leg in, and if we do, that's fine. And then we'll obviously pull back on that leg when it goes in. So right now it's failed to break out this morning. So we tried and had a go at Friday's high, which has been rejected. So it's coming down quite nicely at the moment, but difficult to tell. Jesus Christ. Sorry. Closing one, Dow. Oof, blimey. It's a big push. So I just suddenly looked at my P&L. It's $2.5 grand. Like, get out. 1350. So, whoa, oh, there we go, done. I'm out, flat. So, just close that. Look at that move, Jesus, $3 grand. So, that was the break. That was the add. And that's where I closed that first position out because I just wanted, that was $1,300 profit. So I just wanted something in the bank and straight into TP, which is these highs. The Dow. See, this is why this works on the Dow. Because when the DAX is moving, the Dow gets moved with it because they're small indices with similar stocks in. When you get a sector purchase on the DAX, the Dow goes with it as well. It doesn't work just as, you know, the NASDAQ, you still get the moves on the NASDAQ and on the S&P. But the Dow is more symmetrical with the DAX. So it just works a little better on the DAX. In the futures market, that is. Where are we? So yeah, on the way to TP2 on that. Did we bank? $490. I'm going to let that second half run, I think, for the moment. So that's Euro New Zealand. I'll just do Euro US dollar, then I'll catch up on the chat. So Euro US dollar total range bound move. So this is 2 weeks ago. That's last week's range there. That's 2 week ago's range there. And that's 3 week ago's range there, which is basically a day. What can you say? Buy the lows, sell the highs. So right now, good looking buy. Stop outside of these lows and try and get out somewhere up at these highs. Big old propulsion gap target to the upside, which they sold straight into on that news spike. Then we got this propulsion area here, which was the start of the move down. So I think we'll probably be up in here at some point, but we're going to need negative news on the US dollar to give the market a chance to push up there. So Dow's just about to break out the highs. We're off. So it's just filling these propulsion gaps. Good move. Something just happened. No, just market movement. Sorry, I just need to find my other. Okay. So close to TP. I'm just going to take it. I'm just going to take it off, then I can concentrate. So, you know, a little bit on the table, but it's banked. So, good morning. $2 there, $2 there, $3 there, $5, done. Thank you very much. I'll be here all week. Right. So yeah, longs at the moment, Euro US dollar from where we are. But obviously this is all going to be dependent on US dollar news this week. So it depends where that goes. But I don't think there's a massive amount of positive news for the US dollar moving forward. So I get the feeling this has got a good chance now to rally. We should be seeing some strength on this. Euro is just not able to get a kickstart for some reason. They just can't seem to get it. Even if we're getting good news on the euro, we're getting negative reactions from the market. And this is how it started with the US dollar. We suddenly got a load of good news coming through for the US dollar and it didn't go anywhere. And we're like, that's weird. And then we suddenly get a bit more and it does that. And then we get a negative news event and it pops down. So the euro seems to be getting similar price action at the moment to the US. When we get some positive news, it doesn't necessarily give it any positive movement. So It's a tricky one. And now you've got these two. If these two are going to react in the same way to news as they are at the moment, what we're going to see is an awful lot of range-bound activity on them, which is great for position traders because obviously we mean revert. So it doesn't matter. If it stays in a range, fantastic. We're just going to make money all the time, aren't we? So I don't think there's any reason why one of these should become massively stronger than the other moving forward. So you can trade it in any direction at the moment. If you look at the buyer scorecard for these two, the euro US dollar is a sell, but it's only a sell because retail at the moment is longing it. So when you take that retail sentiment out there, this is a -4, which means that it's a little bit more of a sell than a buy, but it's not particularly strong. So there's no bias on this at all at the moment. So I think we can just trade it in any direction we like. So let me just catch up on the chat. I'll go and look at the pounds. Sorry, I missed the breakout of the opening this morning. How did it go with the testing indicator? We just looked at that. So yeah, well. So there's your, whatever you took today, the only thing that didn't work today was the 5-minute pre-market. If you took the 15-minute pre-market or any range before the pre-market that is not the 5-minute, it worked well. If you took the 5-minute opening range break, it worked well. Whichever break you took today, you made money. You couldn't not made money today. But you could have done, obviously, but it's hard not to make money today. But yeah, that 5-minute range, you know, all my testing, that 5-minute pre-market is just too tight. So that's the only one you would have lost on today. All the other ORBs worked beautifully. Tom, I can't mentally put myself through going live for the first time this August. It's horrendous. Yeah. Probably not the best time to go live, August. Mind you, it's not a bad time to go live. It's all experience, basically. You know, this is why systems and strategies fail, because think about what we're seeing here at the moment with this August price action. I know this is what it's like most of the time because I've been doing this for 15 years. I've sat through 15 Augusts. People tell you things, and until you've sat there and done it, you don't believe them. So people tell me, you need to pay attention to fundamentals. Nah, I don't need to pay attention to fundamentals. And then all of a sudden I get killed and they go, that's because of the fundamentals. You go, all right, I'll start paying attention to that. Someone says to you, you need to be just going into range-bound trades during August because it's crap. You go, nah, I'm going to do my normal trend strategy, and it fails. So then you system hop to a mean reversion strategy because the trend one doesn't work in August. And then in September, everything starts going crazy on trends. And then you're going, oh, my mean reversion trades are all losing. I should have stayed my trend. So then in November and October, you switch back to the trend one when it all goes quiet again before Christmas. Yeah, seasonality does exist in trading. Until you've sat and traded through seasonality, you won't believe me. Yeah, you've got to experience all this. And this is what I keep saying. There is no better education for free than watching these charts. You have to live through these charts and understand that this thing is totally random. Some Septembers and Novembers are great. Some are awful. Some Augusts are really nice big ranges. Some Augusts are really horrible tiny ranges. Yeah, last August I did 15%. This August I'm on 0.79%. It's the same month, same system, same strategy. Yeah, it's all totally random. And until you've sat there and you've lived it, you won't believe it. So it's not actually a bad month to start because you're getting in to a live account and you're experiencing the holy crap, some days you don't make any money part of trading. You just got to accept it. This pays you when it wants to pay you. You can't force this thing to pay you. And what our lives are spent is chasing that system or strategy that forces the market to pay us money. That's why you can't find a system or strategy that works, because when you're trying to get something to do something that it doesn't want to do, you're never going to win. Yeah, you can't. It's not like a dog. If a dog pees in the house, you keep picking it up and you're taking it outside. And eventually that training will sink in. And the next time the dog wants to go to the toilet, stand by the back door, you'll open it, it'll go and do it. You can't train this thing to make you money because it hasn't made you money for 3 weeks. It makes you money when it wants to make you money by moving in the direction you've placed your orders. That is as simple as that. That is what trading is. Waiting for the market to come into your favor. August isn't the month where typically that happens. So not a bad month to start. But it's a wake-up call. Yeah. And this is what I say, when you go live, or rather not, I should say when you go live, when you want to go full time as a trader, you have to make sure you've got 3 to 6 months worth of money in your bank account. Yeah, because you've got to still pay your bills, your mortgage and everything while you're figuring out whether you can extract consistent profit out of this thing. Yeah. So you got to have that in the bank to make sure that you can pay your bills, because when that runs out, you're going to have to go and get a job if you haven't made this thing pay. Yeah. So you've got to sit through August. I need money in the bank before August to pay my mortgage in August if August goes quiet. However, and this is where things like diversification of strategy come in. Yeah, the opening range breakout strategy today has paid my mortgage for August today in one session within an hour. Yeah, totally different strategy, huge risk diversification to position trading. But when one's not working, you rely on the other one to pay you. And you basically take that money and you run away with it. You stop. Yeah, pay yourself. This is why prop is so good. Prop is amazing at paying the bills. Because you can just extract large portions of cash out. A bit like those guys that were doing the 5,000 to 1 million. Brilliant. They can go buy £1 million house. Now show me that you can sustain that 5,000 or 500 to 1 million every single month to pay the mortgage on that house, to pay the bills, the heating. Doesn't work that way. What would be your take on my Forex funds? 100k account or 3 20k accounts? $417. So what's my take on it? Whatever you want, Miro. It's up to you, isn't it? If you trade 3 20k accounts for $417, you're getting 60k's worth of funding for $417. If you trade 100k account for $499, you're getting 40 grand's more funding, almost 50% more funding for an extra $80. Up to you. All I would say is in prop, the thing that kills every prop trader is drawdown. Yeah, daily drawdown or account drawdown. Basically, what you're doing is you're buying drawdown. So with a 100k account, you're buying yourself 5 grand's worth of daily drawdown. Yeah, with a 20k account, you're buying yourself $1,000 worth of drawdown. Yeah, so if you want to make $1,000 a week, for example, you're probably better off going with a 100k account because that's really easy. With a 20k account, it's going to be hard. I don't know. Your choice, isn't it? It's a personal preference. I don't bother with anything under 100. I don't bother with anything that isn't 100. I just trade 100 because it's just, you get used to it as well. Just the norm. If you want to trade different strategies, though, different strategies on different accounts. I only trade one strategy on one account. I don't mix strategies. How are you trading Dow futures in correlation to the DAX? I think I've already answered that, haven't I? Pound New Zealand starting turning. We'll get onto that one in a sec. But August the 14th is a lunar phase, green period. We're at max latitude heading down. That is true. So there is a high probability the market will basically drop now because of the lunar phase. Definitely. Dow's just broken out the highs. And the DAX is trying very hard to have a crack at those highs as well. Have we got any earnings? Just wondering what the market's reacting to. No, there's no earnings on Friday and there's no pre-markets today, so not quite sure why the Dow is so alive this morning, but it is. Good. Just normal price action, basically. Right, pounds. So pound odd, we're up at highs, so there's a potential rejection going on of this high at the moment, but look at the ranges again. 4 days, 4 days. Yeah, don't get greedy. If you can get half an ADR of movement out of it, take it. But it's not a great level, this. And the pound is a buy. The Aussie is a sell. If that monetary policy statement comes out as hawkish tomorrow, well, I don't know. I think there's more chance of the market having a bearish reaction to the Australian dollar monetary policy statement tomorrow morning than they will a bullish. So I would be looking much more for longs on this, really. But you know, you're going to get a couple of days of push, pull, couple of days of push, pull. That's really all you're getting at the moment on it. So if you can almost, you know, build a strategy around, if we get 2 green candles, just short it and get out at the end of the day. You know, it's that simple at the minute with these little ranges we got going on. But yeah, pound odd, not really in a good spot at the moment. Last trade I had on it was way back in July. Look. There's been a couple of short opportunities. Not extended enough. So nothing exciting there. Pound CAD, totally sideways. We're bang in the middle of last week's range at the moment, so there's just no reason to take anything there. That's that level of basically resistance here turned into support. So watch these lows. So top of this propulsion gap, yesterday's low, previous day's low for longs. Highs, obviously, look for shorts there. We've got a propulsion gap fill there. It's more likely, again, this is going to go long than short. But, you know, look at how long it's taken to go from 3 weeks ago. Yeah, from 3 weeks ago, we're that far away from where we were 3 weeks ago, not moving. So just that, and try and get half out of it. You know, 1-to-1s. The Dow and the Dax have just rejected that high. So we're pulling back into propulsion. So watch this level here. So top of that area is where we've hit those limits. So watch for buyers back out of that area. Sideways, pound Swiss, same thing. Watch the lows. Last month's low is there. This is 2 week ago low. This is 3 week ago low. So this whole area here, anything you get down here is worth a buy. Have a shot at a long. Pound Swiss, obviously bias is like that on that at the minute. So difficult to pick a direction on it. And obviously, as we know, the Swiss franc, when it wants to power up, will just fly. So wait and see where it goes when it goes. There's no news really that's going to affect the Swissy this week. We've got pound retail. Oh, sorry, no, we've got CPI. We've got pound CPI this week on Wednesday. Pound retail on Friday. So yeah, pound CPI on Wednesday. We've got the claimant count tomorrow morning. Doesn't tend to do a lot. So we're waiting for Wednesday for the pound. So we'll look and see if we can get some decent movement on that pound on Wednesday. CPI, the way it's been going, if you quickly look at the CPI figure, this is the year on year. This was our first, it's been dropping, which we've been forecasting. So, you know, when we were up at those 10%, there wasn't really anywhere else you can go but down. So we got those downs, but it didn't go down by as much as we wanted it to, if that. Last month, July's figures was the first time we've actually got a worse than forecast CPI, or better than forecast, if whichever way you want to look at it. Inflation coming down is good for us in the UK. It's bad for the pound as a currency, though. So that's the first time we've actually had a CPI figure lower than forecast. And it's dropped very, very, very fast. Yeah. So I think there's a good chance that we may get a negative off of that CPI figure. However, they are still forecasting 2 interest rate rises on the pound. So even if that figure comes out as negative, I don't think we're going to see the pound drop. I think we're going to see the pound still rally, because we've got 2 interest rate rises of at least 0.5 to 0.75% coming in the next couple of months. So this is still bullish for the pound. So see what happens. If that CPI figure comes out higher than forecast, this thing's going through the roof, because it means they're going to have to put the interest rates up even more. So I think still my stance is still bullish on the pound, although at the moment it is starting to slow down a bit. So be looking for longs on that. So if we can get down to here by Wednesday, I think that would be a lovely little long, and you could be out of that today very easily. Pound yen, short at the moment. Just got the one position on from what, 1, 2, 3, 4, 5 days ago. We've pushed up into the monthly highs. It's too close for me to take a second position. So the monthly high was 139 pips away. ADR is 1. Oh my God, my eyesight. Make that bigger, that text. Pound yen, 143 is ADR. That high was 140. So the reversal alerts have been just too far in for me to actually get a second position on that, which is really annoying. That would have been an out. But if it does push up above this high, I'll be getting a second short on this one. Waiting for that yen strength. But it is up at the monthly high. So again, it's a lovely looking short opportunity. Whether you want to take a short now, 2 days before the CPI figures, I mean, if you get in short on this at some point up here, and it doesn't push more than half an ADR or so out the top, if we do get a negative CPI number, worse than forecast, obviously this thing's going to come down. And if we do get that coupled with some yen strength bouncing off that 145 level on the US dollar yen, this thing could come down twice as fast. So I think we could find ourselves easily back down here if those two news events, or if that news event and the yen strengthening this week happens, we'll be down. So yeah, we're looking for shorts on it. That's not a bad looking short actually from where we are. The trouble with this, if you sell here, is you're selling straight into support. So we have already bounced out of this level twice. So you're selling into an area of buyers. And you've also got this area here, which we really couldn't get through. When it did break, that propulsion gap held. So you've got two zones here, potentially, where we might get a bounce to the upside. So it's a little bit of a risky one. It's very difficult to bring myself to short the pound, but we did have a drop last time, so maybe it is just time for a double drop. But, you know, look, we have never had a double drop. Difficult one. Might leave that for the minute. Pound New Zealand. So that's just started to roll over, as somebody just said. I've got short on it from Friday. Target down at these lows, which is just above these highs. So we double topped. We finally broke through, put the propulsion gap in, and then we tested propulsion. They bought it 4 times and rallied it off. So be looking to come back down and retest this area. Wouldn't want to get any more aggressive than that at the moment, and that's where my TP is. So yeah, we'll see what happens with this one. Again, news, if the CPI negative is negative, we'll get a good push to the downside. We've got the Aussie dollar news, we've got the New Zealand dollar news this week. So there's plenty of news coming up. Tomorrow we've got the Aussie news, then we've got the New Zealand dollar rates on Wednesday ahead of the CPI figure. And then we've got the unemployment on Thursday as well for the Aussie. So absolute perfect storm for this one would be having a positive outlook for the Australian dollar tomorrow morning, and then the market having a positive reaction to the freeze on the New Zealand dollar interest rates, or the New Zealand dollar interest rates going up, and then having a negative CPI figure for the pound. Pound New Zealand will be down 200 ADR easy this week. Yeah, which is basically there. So we'll see, but short on that at the moment. Pound US dollar, sideways, total sideways. I've got 3 longs on this one. You can see where my first entry was there. I've had to do 2 drawdown controls on that one. I've done 1 drawdown control on the second entry and just taken that third entry 2 weeks ago. 2 weeks ago, I took that third entry. It's just not going anywhere at all. So I'm just hoping we get some news of some description. I don't care what it is, just some news. Because if the market moves, it will need to pull back on the move. If the market hasn't got any news and hasn't got any reason to move, it's just going to do this, and I'll still be in this in September. So I just wanted some. I want some move. I don't care. Push it against me. Just do something. Stuck. So long at the moment, and I would be looking to buy this up as well if I was getting into single positions on it. Double bottom bounce there today. So nice looking long opportunity. Drop down M15. There's your reverse alert. Just gone in. There's your retest. Yeah, there's your W pattern. Just not getting anywhere, is it? New Zealand's. So all the New Zealand dollar pairs, you've just got to bear in mind we've got the news. Oh, I've missed it. Oh, no, I haven't. I'm in long. So New Zealand dollar CAD, I've got 1 long on already from this morning. That's the H1M5 entry, and that's going very nicely at the moment. So TP on that one. Whoops. I'm going to put just shy of that propulsion gap, 150 ADR. So retesting this area here. Yeah, that propulsion gap. And that's a beautiful low bounce look on the monthly. Yeah, so that's a monthly double bottom. So this could come, I mean, this could be the start of a move. New Zealand dollar and Aussie dollar both got news this week, so we could see them turn bullish. I don't think they will, but not to that extent anyway. But I think we should see some, at least a pullback on that. If we can get 50% retracement on that drop, that'll be enough to get out. New Zealand dollar yen sideways. We've had a little bit, so we basically had this range, and then we had a bit of a whipsaw around it. We're back in it. So buys at the moment. So double bottom bounce, triple bottom off at this level here. Looks good. Push up into the highs or into propulsion, depending on where you want your target to be. This basically is the news. So that's the yen promising, under delivering. So I wouldn't really worry about that propulsion gap. It's more of a, that was a big mistake type move rather than a propulsion move. So wouldn't worry about that too much. But yeah, so nice looking long opportunity. Your 15-minute reversal alert's just gone in this morning there. And it was straight in, straight off. New Zealand dollar US. So there's no real decent levels on this anymore because we broke that kind of monthly low on Friday. And this morning we've kind of rejected it. So they've swept last week's levels. So there's a good chance that this might push back up into these propulsion gaps. But we are going to need some positive reaction off of that New Zealand dollar. Yeah, the New Zealand and the Aussie are just not very well at the minute. So it's a tricky long to take, but it is a good looking long. Update. From a reversal perspective, it's already played out, but you wouldn't have known that when you took it. It was going to play out. So up into those highs, really, that accumulation there is really all I would look to target on this one, which isn't miles. So from where we are, it's 49, which is about 3/4 of an ADR. So look for these propulsion targets to the upside, and then potentially just carry on in that beautiful market structure to the downside. Unless it fundamentally shifts this week. Got lots of news that could do that. US dollar CAD, got 2 shorts on at the moment. I've adjusted my TP on this into this propulsion gap here. So that was the first entry taken there on the H1M5 mean reversion, looking for a push back down into that high or into these propulsion gaps. We went sideways for 3 days, and then we had that news event. So did 1 drawdown control, added a second position. Average is there. I've had an out on it there, had an out on it there, had a break even on it on Friday. 4 days sideways. Just looking now to get out in this propulsion gap. If we can get a push back down, take that low into propulsion, I'll be out. Just get out with some money. US dollar Swiss. 2 weeks, 10 days. You can short these highs, which you kind of missed. If it gets up to that high, short that one. You've got this high, low, high here. Yeah. So longs from ADR. So longs from ADR today. If it gets there, shorts from the highs from 2 weeks ago. And US dollar yen is the 145. So we're waiting to see if the market is going to react at this 145 level. We hit it Friday. It's too early to tell whether or not we're going to get some bullish sentiment coming through on the yen. I'm targeting that propulsion, basically looking for a deep pullback on that move. As a worst case scenario, best case scenario obviously is the yen powers up. We get some negative US dollar news this week. And this obviously we'll find this ourselves back down here within a week or two. So the 145 level obviously is the current reaction point before we get to 150, which is where the last intervention happened. So we had 3 interventions. That was the main one at 150. That's the one the Japanese kept saying, if you do this, we will fight you back. And they did. 145 is where we started getting them telling us, you need to stop this, otherwise we will intervene. And the market actually listened this time. And we're back here. So the question is, are we going to double top this? And start to see this weakness continue in the US and carry on? Or are we going to run that 150? So right now we're in this are we or aren't we area. So I'm short at the moment. If it breaks long, resign myself to the fact that you're going to position trade this up to 150. Basically, that's all you can do. So if we do break 145, we're looking at somewhere in the region of 4 to 5 ADR ish move to the upside. And obviously it's not going to go like that. It could well just, do that on the way, which is fine because that gives us millions of outs, doesn't it? But if it does Gus want to go into a grindy move a little bit like that, then we'll just be in it. And I've only got the one position on, so 2, 3, probably 4 positions by the time we get the pullback. And this time I will hold it. I say that now, I won't, but you should. I never do. There we go. That's everything covered. I've done Aussie yen already. Go and watch the replay. Morning, Kansai. Good afternoon. You're late. Antonius. Grateful Buster. Gold is moving up. We've got a weak US dollar. Yeah, so a little bit of a weak US dollar. Obviously, that will give you movement to the upside on gold. So this is the double bottom bounce from Friday that's currently in play. Just watch that high. If you look at, look at not just with gold, but look at everything at the minute. Yesterday's highs, previous day's highs. Yeah, this is what these blue dotted lines are on my chart. Yeah. When you're in ranges, the market will place its limit orders at the yesterday's high, yesterday's low. So if they're selling or buying, they will be looking for areas to enter the market, and they will be entering the market at the highs and lows, which is what they do. They buy the highs and sell the lows. So, if you're long on something off of a buy off the lows, you're going to have limit orders triggering at those highs and those highs. So depending on how brave you are, you either get out with your profit there, or what normally most people do is, let's say they've got in there, when it gets up to there, they move their stop to break even, and then it comes down and stops them out on its way up to the next spot. So, which is why you don't use break even stops. But But yeah, just watch these levels if you're longing gold or anything. Yeah, don't get greedy with anything at the moment. Look at what stuff is doing. Look at that range, how tiny that little range is there. Every time we get any kind of move in one direction, it doesn't last. It's very rare for the market to put 3 or 4 day runs in at the moment. It just hasn't got the liquidity to do it. So short plays in and out as fast as possible, really. I was just looking at this morning. I was just down to 1.4 drawdown. And I was watching my P&L and I just thought, oh, there's an opportunity to bank $300 or $400 here. I might do that after the live room. It's gone again. It's just so undecisive, isn't it, at the minute? Morning, Ian. Closed out the DAX manually for nearly 4R. Good job. Yeah, I got a good 3. What did I get today? Got just under 3 and a 1. So I got 4R out of my 2 positions. Putting back into propulsion. So that wick test has just been completed, which was there. So you could buy it here. Although obviously there's a lot more propulsion area available to buy out of yet, but I'm out. I'm done anyway. That is done. Did you do Aussie CAD? Yeah, at the beginning. So I've just been through every pair from top to bottom. So this afternoon in the New York session at 2:20, I will be saying, if you want to have a look at all the FX pairs, go and watch this morning's replay, because by the time we get to this afternoon's session, I suspect we'll be exactly where we are now. And there's no point in me going through the whole thing again, because it's exactly the same. This is why I'm only doing 3 days at the moment, because I'll just be saying the same thing over and over again, every session. So Aussie CAD, I don't know, I'm just, not a lot, is there? This is a difficult one because it's just taken that low out. So you just had a reverse alert on it as well. I can't see them doing a lot with the Australian dollar today. Yeah. Tomorrow morning, we've got the monetary policy meeting minutes and the wage index. So I suspect any movement we do get at the moment will probably get undone. So I wouldn't get too excited. I was just going to have a quick look at what the all the strategies on the EA are doing. I haven't checked last week. I did check one day last week, but I just wanted to see what they're all doing. So I suspect the ADR reversals is probably the one that's milking it at the minute. Right. Come on. Seems to take forever to open up this VPS at the moment. I think it needs a reboot. I hate rebooting my VPS. It scares me every time I boot it. Come on. So this is the H1 mean reversion count. So this is the one that I'm trading in the live room at the moment. No, it's not. Sorry, this is H1 hedging. So yeah, H1 hedging's done 9.5% so far this month. Not bad. Usual drawdowns, always 10 to 20% drawdown because it's hedging. So it's always sitting somewhere around there. So Aussie dollar Swiss at the moment, it's stuck in a long trade. Aussie dollar. But yeah, so that's done 9.5%. H4 mean reversion done 2.86% this month. Woohoo! Doing better than me. Sitting in 2% of drawdown. That's my account. And ADR reversals, yeah, no, it hasn't done that well actually. 2.3%, sitting in 4.5. So stuck in Euro New Zealand at the moment. Although that could be undone literally in a day. 2.87 drawdown on that one. But yeah, so you see, compared to previous months' results with all of the EA strategies running, they're all doing way less this month than the norm, just because nothing's. It's weird because you would normally expect in a month like this for mean reversion strategies like we trade to be really, really good, but it's not the fact that we're in a range, it's the distances it's making within these ranges. When you're looking to target sort of 3/4 to an ADR and it takes a week for it to move that distance, it just makes it very hard to get out of your trade. So you tend to get into a lot of stuff, but getting out is the hard bit, just not getting enough movement. So it's tricky, but just hold. If you want to bank bits and pieces, bank bits and pieces. I just find it very hard to bank anything under $200. I just can't bring myself to do it. It's pointless. Right, that's everything covered. Anybody got anything else they want to discuss or look at? Let me know. Back this afternoon at 2:20 for the US session. We will trade the US indices as usual. I've got a bit of coding work to do on this new version of my EA today. Some fine-tuning bits and bobs, but yeah, so we've had a little bit of movement. Obviously, that there was obviously some kind of sector purchase this morning. Look, so they bought something today, didn't they? But there you go. That propulsion gap's holding. So we are on our way on the DAX. We've got a long way to go to get that fill done, though. So there's plenty all week. There's upside movement this week, upside potential all week. So there's our gap. That's this morning's gap fill. That was our rejection of the lows. So yeah, just watching 125 ADR today. I don't suspect we'll get to 125 ADR today, but if we do, that's where we're going to find some resistance because they've been selling that level for 5 days now, 6 days. So we will get stuck there, but whether or not we can break it, we'll break it at some point because we've got to get up to there. Oil, I haven't done oil this morning, no. Oil's got stuck at the highs. So obviously this is the level we were looking at, which was the previous range high. So we hit that level initially at the beginning of December. So for 7 months, 8 months now, we've been sideways on oil. So the $67 to $85 a barrel range, or 67 to 83, 84, is basically what we've traded all year. 95 is the interim target set by Goldman Sachs, and 107 was the ultimate target set last year. We're not getting anywhere near it. So we are at a critical point here, which will decide whether or not there is demand for oil at higher pricing. I suspect probably not at the minute. So I would be interested in buying a pullback. The difficulty with buying a pullback is, where is the pullback going to end? So it's a tricky one at the moment, oil. But we're at that level. So this orange line here is that previous high back here. Yeah. So it has rejected it. And they're pulling back. So it's whether or not we are going to continue to rally. I don't know. I'd much rather buy a pullback somewhere down here. If we can get a 50% pullback on this, I'd be interested in starting to buy it. If you think about it, we've got an obvious definite range low in at 67 a barrel, which we've supported multiple times. So if we can get a 50% pullback on this, if you were to buy it here and just scale into it down to 67 a barrel, it's highly likely it's going to rally out of that 67. If it then breaks that 83 and goes for that $95 a barrel by the end of this year, literally anywhere here you buy it, you're safe. The only thing that would scupper that is if suddenly that, for some reason, that $67 disappeared, which means they're going to have to increase output, which they're not doing. OPEC have capped it, so it's just unlikely they're going to drop below that level. But I wouldn't want to buy this breakout here after a rally like that for literally an entire month. We did nothing but buy oil, so I want it cheaper before I get in. Hard. Equally, it's a good short where we are. Short, stop above the high, and think inverse. Yeah, you got all that room to the downside if it's going to do a 50% retracement. But whenever you're looking at any kind of move and looking at retracements on it, the 38 to 71 is the area where you're going to test normally on a pullback. So if you got in short right now with a stop above that high, you've got a 1.5 bar, even if it just does a 38 retracement. That is assuming it's going to do a retracement. If it is just going to push out from those highs, it's very, very hard to get in, isn't it? So it's a tricky one, oil. Very tricky. I don't position trade it, so I want to be using stops with it, but I hate using stops on anything, as you know. So look at the market structure on it, though. Look, absolute textbook. Right now, all pointing towards $85 upwards, and the entry was this morning. Tricky, very tricky, oil. Random question: would you take out a 2 or 5 year fixed mortgage right now? 2. I was talking with my wife about this. My mortgage doesn't come out of fixed until 2027 because I'm clever. So I anticipated all of this happening, and I fixed for 5 years. I fixed for 5 years when we were on 0.25%. We're now on more. Brain's gone foggy this morning. I can't even remember what we're on. 5, aren't we? 5.25, yeah. So I fixed at 0.25 for 5 years. So just think about it, right? Inflation is coming down fast. Yeah, we've dropped from 10% to 8% in 3 months. So inflation is forecast to continue at these levels dropping, which takes the inflationary pressure off the UK to increase interest rates. Bailey has said that 5.75 is now looking like our terminal rate at the moment, assuming this all continues. And I don't see any reason why this shouldn't continue to drop. Everything is starting to roll. Yeah. So all of the energy supply problem is getting sorted out. Energy costs are dropping. That's one of the core inflation figures that drives inflation. Food prices, with what's going on in Ukraine, we had the grain shortage. That is being rectified now as well. There's other things happening. So it's all basically starting to drop at a rate where it should continue to drop. So if 5.75 is going to be terminal rate, yeah, and you're currently sitting at 5.25, we will be here by the end of this year, probably by November. Yeah, within 3 months, we will have another 0.5 on that interest rate, and that should be it. So if you've got a mortgage right now that is going to be coming out of a fixed rate, if you fix it now, your worst case scenario, let's say you've got to fix it tomorrow, your worst case scenario is going to be 5.25 to 5.75 over the next 3 months. So then you've got a good 18 months plus knowing that your mortgage isn't going to go up. So if you went on a variable rate now, You sound like a mortgage advisor. I'm not qualified in any way, shape, or form to advise on mortgages, I have to say. But that's what I would be doing now, is going onto a variable rate, because I know that I've got probably no more than 0.5% fluctuation. The downside danger to this at the moment is if this comes down too fast, yeah, if that 7.9 suddenly becomes 6.9, and then a month later it becomes 4.9 instead of 5.9, they will have to drop interest rates fast to stop inflation going below the 2% target, because you don't want it going too fast, too down, too low either. So they will reduce this faster. So I foresee this really for the next 12 months, 5.75 to 5, somewhere around there in 12 months. Then the year after, we will start to drop this. And interest rates come down faster than they go up, always, because the purpose of interest rate rises is to get on top of inflation. What you do is you try and increase as fast as you possibly can to keep unemployment in check, and then get this starting to come down as quickly as you can. But when this starts to come down, it kind of comes down fast. So you have to get down faster. So if you haven't got to do anything with your mortgage for the next 3 months, in 3 months' time, you should be seeing the highest rate we're going to get in the UK. That also is true of the US and probably Australia and New Zealand as well. Yeah, as long as these all remain as minuses, every time they change, as long as they're still all minuses, there is no reason for them to increase their interest rates further. So you want to be fixing. If you fix for 5 years, right now, and in 3 years' time, this is sitting at 3.1% or 3.3 or 3.25, which it probably will be in 2 or 3 years' time, you're just going to be massively overpaying. So I personally, I'm fixed right now at a ridiculous rate, and the banks are losing money on me, which is lovely. But if I, for any reason, had to redo my mortgage today, I would go onto a variable rate. I wouldn't fix it. Or if I had to fix it, I would fix it for 2 years. Because it's going to take a year. We will probably stagnate for 6 to 12 months at the same interest rate. We won't go up, we won't go down, because they will be very cautiously waiting for this to get to a point where they can go, right, if this continues, and there's no reason it shouldn't, war, famine, usual pandemic stuff happens. If that doesn't happen, we will have a target to hit, and this will basically then start to gradually come down. So that's what normally happens, though. But, you know, back in the 70s, we were looking at 15% interest rates. 10 to 15% mortgages. So, you know, things can go wrong, but we're in a much better position now. So I don't think we're going to have any massive interest rate hikes. The only thing that will affect this will be a war or another pandemic. Yeah. If we have another strain of a pandemic, which we are not ready for any reason, we don't know how this thing might adapt. And, you know, we only really find out in winter. If for any reason we had to go into any kind of lockdown that would lock the economy down, that's going to massively change it. So, or if there's a war, you know, if Europe kicks off, Russia has said it's sending all of its troops to its western borders. Its western borders are on the edge of NATO territory. So if for any reason anything was to kick off at a border with NATO, that starts World War III in effect, doesn't it? And then China come in and back up Russia. And all of a sudden, we're in trouble. That is definitely going to affect it. Only war and pandemic, they are working on both at the moment. Exactly. So, yeah. But, you know, it's one of those things with... I've been asked this by family members as well. Because a lot of my family members have got pensions that... and again, I'm not a pension advisor. But everything to do with finance revolves around the fundamentals of interest rates and inflation. So these things affect your pensions, they affect your mortgages, they affect your savings, they affect what you pay with your electricity bills. You know, everything revolves around these two things, and these are the fundamental drivers for currency conversion rates. So it's, if you're trading FX, this is what you've got to know about. So I get asked all the time, should we now be putting our money back into stock market index linked pensions? Don't know. Difficult to tell at the moment, isn't it? But we've seen a bear market which looks like it's finished. Yeah, if you look at the S&P now, it looks like the bear market is done. Yeah. So this is bull calm regime, normal, don't worry about stuff. This is a bear volatile, which we rarely get this. And this was caused by, obviously, the pandemic fallout. Looks like we're getting back into bull calm. So this is where you now, stick as much as you can into the stocks, because we should be seeing next leg, assuming nothing else happens. So, right now, if you've got a pension that is in safe zone, if you like, sticking it into an index linked pension with something like the S&P is probably the best way forward, isn't it? But, your pensions advisor will go to you, are you risk averse or are you wanting risk? If you're risk averse, you'll stick it in something super, super safe. But, it's all linked. It's all the same stuff. It's all driven by this, interest rates and inflation. So we will see, but I'm not. My pension's very mediocre anyway, so run your own pension. For own capital using the hedging set file, 10 to 30% drawdown should be okay. Well, I've seen it go higher. All depends if there's a squeeze, doesn't it? So yeah, hedging is risky. That hedging set file, the original hedging set file that I released when I released the EA years and years ago, that M5 using the RSI, it was always a risky set file. It's a very high risk, high return. Yeah. So again, talking about pensions, if you want high risk, high return strategy, hedging on H1 or M5 is going to return you a very good result. That will easily do 30% return a month. However, it will also see 20 to 50% drawdowns. 10 to 30 is the norm. But, again, always think of the bell curve, right? Yeah, this is the norm. So let's say 10 to 30% is the norm. This and this is 5% and 50%. Yeah, there are instances where you are going to go into this zone and you're going to go into this zone. You're going to cross outside of this norm. When, how, no idea. So, if you don't want high risk, that's not the strategy for you. If you want steady, H4M15, H1M5, ADR, again, high risk, because you're getting in on an ADR reversal that may or may not be the turning point. If it's not the turning point and your RSI is sitting down here and you take a short, there's a long way to travel and a lot more positions you're going to go into drawdown on with an ADR reversal than if you take an H1M5, which is why H1M5 is kind of the best strategy, or H4M15. Any mean reversion strategy that works off RSI extensions is safer because the market's already done its move. So if it wants to squeeze, fine, you are going to get squeezed. There's no way you can not get squeezed at some point. But the probabilities are way more on your side. With the hedging set file, as soon as you get a reverse alert, it trades short. And then as soon as it gets a reverse alert, it trades long. There is no condition in the market. It's just flip a coin, let's go long, let's go short. Let's do both. Yeah. So obviously there's high risk involved because one of those is going to be wrong. The market can't be right on both, can it? Yeah. If you've shorted it and longed it, you are going to go wrong on one of those. That's the beauty of hedging though, isn't it? You're always right on one of those. It's how long it takes to get out of the wrongs. which is why it's always in drawdown. Because as I said, when you're going both directions on something, you're always going to have one position in drawdown. So, but that's I check in on it on a regular basis. So it's always in 10-20%. That's where it lives. It lives in 10 to 20% of drawdown, occasionally less and occasionally more. So if you factored in 30%, you're safe most of the time. But it's all to do with squeezes. So look at the bell curve on its side over a daily, weekly chart. What? Well, I don't understand what you mean. That's to do with volume. That's volume profile. I'm talking about system and strategies, not volume profile. Right, that's all I've got for you today, really. So I'll be back at 2:20 this afternoon. Not going anywhere, are we? Shows the trading areas, Brian. Well, yeah, that's a volume profile, isn't it? But it's useless in Forex because there's no volume. So there's no centralized volume. So you can only use it in futures. It's useful in futures until the market shifts. And then obviously it's no use because the bell curve moves. Bell curves are used for measuring performance and extremes. Volume profile is totally nothing to do with bell curve at all. It's a totally different thing. Anyway, go and do some research on volume profile, and then forget it because it's no use in here. But if you're trading futures, useful. Right, so I'm just going to monitor this today. I think I'm going to just start banking 0.2s whenever I can get them, because I just need to get something banked, basically. Everything's moving up and down, but it's not moving up and down enough. So anything that's getting towards profit, I think, is just worth taking off at the minute. So I'm just going to monitor this today. I'll be back at 2:20 this afternoon, and then we'll obviously have a look at the New York Open, trade the opening range breakout strategy as usual for the New York session. And then I'll be back on Wednesday for the next session for Frankfurt. We'll see how we get on there. But hopefully we might be able to bank something today or this week, because it's been a crappy couple of weeks. Mumo, your ORB trades on the Dow futures. You set the pending orders manually. Yes. You can't, futures, you can't use EAs in futures. I mean, you can if you're using something like NinjaTrader, but no. Yeah, it's very, very easy. I'm going to open now, but yeah, you just basically click buy. It's very, very simple. All done manually. Good old way, good old days when we used to trade manually before EAs existed. Right, I'll leave it there. Anything you need, let me know. I'll be back this afternoon at 2:20 for the New York session, and 7:50 on Wednesday for the Frankfurt session. And yeah, we'll see if we can milk some more money out of the market this afternoon, and yeah, go from there. All right, so have a good morning. If you need anything, I'll be in Telegram. Otherwise, I will hopefully see you this afternoon, if not Wednesday morning. Have a good one.